Hello everyone, welcome to Currency and Commodity Buzz. This is Manav Modi, your bullion analyst. Let's look at how the commodity market has performed in the month of May and what's our outlook for the next month. Talking about precious metals, we've seen gold and silver prices witnessed a significant pressure in the previous month. After gaining good momentum in the first 4 months of 2023, where gold fell by about 2% and silver by about 6% on the domestic front. The rate stance from the US is mixed as Governor Powell indicated a possibility for a pause in the month of June meet, while some Fed officials started preparing the market for one more rate hike of about 25 basis points. Along with this, US debt ceiling concern was also in the limelight, which has increased the distress in the market and supported the move in overall dollar index. Few economic data points from the US were also better than estimates, weighing on the safe haven assets. A swift move in silver also justified the move in gold-silver ratio on the higher side. Any update regarding debt ceiling, rate hike expectations, economic data points like jobs, inflation will be important to keep an eye on. Both metals could stay under pressure at the start of this month, which could be used as a buying opportunity from a medium-term perspective. Looking at the energy market, we've seen prices are log-jammed between macroeconomic concerns and demand strength in the product stock, with US debt deal also increasing volatility in the market. On OPEC Plus front, mixed reports regarding production cut pushed prices lower. Updates regarding this month's OPEC Plus meet will now be important to watch for. We witnessed a rise in volatility as Saudi Arabia warned short sellers that output cut can be possible. Money managers are as bearish as they've been in more than a decade, which is now weighing on prices. Updates regarding China's economic and demand numbers will now be important to watch for. We could see some upside at the start of this month. However, from there, a correction looks likely. Base metals continue to slide for yet another month, with copper sliding to its lowest in 6 months and breaching by about $8,000. This is a reflection of growing global economic concerns and realization that China's recovery has not sparked the expected boost in demand. Disappointing macro data from China have acted as a wake-up call to the weak reality on the ground. Copper inventory on the LME has nearly doubled in the past month with 21 successive days of additions. However, one must note that this comes at a time where inventories were very low with mere 2 days worth of consumption left. The cash to 3 month spread on the LME has also tumbled into the contango, with cash being more than $60 per ton cheaper than 3 months prices, widest gap in data going back to 1994. Also pressurizing metals were firmer dollar, which touched a 6-month high against the yen, as expectations grew that US interest rate would remain higher for longer, while the debt ceiling impasse kept the risk sentiment fragile. Zinc prices also fell to their lowest level since 2020, falling by about 35% from highs of about January, as weak demand from China pushed the market into the surplus and exchange inventories rose, taking the total LME stocks to about 8-month high. Overall metals could see some rebound from the levels they are currently at, but have they hit the bottom yet or are poised for immediate reversals? That requires more confirmation. Thank you. For more such updates, search Motilal Oswal.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.